something very strange happened yesterday. We saw the Federal Reserve basically admit that a recession is coming. Run for the hills. You should start dumping the U.S. dollar, while at the same time telling us that U.S. banks are fine. Like, the banking system is fine, but yes, we are heading for a recession. So basically, speaking out of both sides of their mouths, we have some exclusive video of Jerome Powell as he was heading into this meeting trying to fix the U.S. economy. Take a look at this video. So this is Jerome Powell trying to save the U.S. economy right now, really by just doing whatever they can to kind of shovel crap at things and hope that it will stick.
Well, we have to at least give him a little bit of empathy because he was in a no-win situation. If he didn't raise rates as they had planned to do, it would signal a crisis, precipitated by the loss of so many big banks. If he did raise rates, it would slow down an economy that's clearly in a crisis. So it was a rock and a hard place.
Perhaps, or you could say that they waited way too long, artificially keeping interest rates low in order to, and printing all sorts of fake money. So why?
Sure, but we're talking about the choices he had now, both of which were bad.
Yeah, now, right? But he's been Fed chair for how many years now? Right. So he's been in this position for so many years. Like, now, this is the accumulation of all of these bad decisions for years, right. Which has precipitated this problem that we're currently in. So,
yeah, I mean, if I start like storing like open buckets of jet fuel in my apartment for years and years, that I can't complain when it burns down.
Yes, exactly. Yes. You keep putting cardboard next to the gasoline in your garage. Eventually, something bad is going to happen. You probably noticed that something was going on yesterday, because if you looked at your retirement accounts, you may have noticed that it plummeted last night. The Dow collapsed 530 points on this news. 530 points after the Fed hiked interest rates. They hiked, of course, 25 basis points. So what exactly happened here? 25 basis points. What does that mean? This means that we're now at 5% interest, about 5% interest rate for the Federal Reserve, the benchmark rate. That's the rate at which everything else is tied to. Credit cards, everything uses the benchmark rate from which then to do all of their chicanery. Powell basically admitted yesterday that they didn't want to do it, but they wanted to keep their word because they promised they would do it, which is raise rates. Powell then admitted that what we've been saying all along is true, that a recession is coming or is already here. And he said it. He basically said these words. Here are his words, that, that basically it's already here, and that we are concerned about the tightening of this market right now. They released their numbers yesterday from their economic projections, which is basically their semi-annual book of projections. The Federal Reserve is now admitting that the United States, the GDP projections are lower, and there's likely not going to be any more rate hikes. That's basically what we're hearing. Now, we could, they're holding out the possibility that there could be additional rate hikes. But for now, that's basically it. In other words, we're done. We give up. We're throwing up our hands, and we're going to let the market now sort itself out, which many have argued for years is what should have happened. Let the market sort itself out. Let market forces sort itself out instead of being artificially propped up.
Which is something that Ben Bernanke really wanted to do during the 2008 financial crisis, and he was pressured into manipulating these rates when he really didn't want to. He believed in natural market forces, and once you do that, you can't really put that horse back into the barn in any kind of immediate way. So
Right.
Are we now circling back around to not only feel the effects of this financial crisis, but then feel the effects that we didn't feel from the 2008 ones?
Perhaps, as we're going to hear from Peter Schiff in a moment, who believes that, this is going to be far worse than what we saw in 2008. So
is this because businesses, like the biggest corporations, all can borrow money, and the biggest banks can borrow money at 0%, and now it's at 5%? Because we will go get loans and we pay interest no matter what. So now our interest rates are going to go higher, but are they just pissed because their interest rate is going up and they're going to have to actually pay something rather than these 0% loans that they always take?
Well, it will slow up borrowing quite a bit, and the economy is built on borrowing. And it will also slow up some of the free money that the government has been printing for itself. So when you think back just 3 years ago, when pandemic measures were put into place and the government was basically creating trillions of dollars out of thin air and giving it out to people as an incentive to stay home, well, there was always going to be a time when we all felt the cumulative effect of that, which is what we're doing right now.
Right. Yeah. And as interest rates go up, of course, it makes it more difficult for people to get those loans. It makes it more difficult for people to get home loans.
Yeah. And so now the people who felt like the pandemic stimulus was a big help to their checkbook, to their checking account, and experts were warning, you will feel this later because the cost of things will go up. So you may enjoy this $1,300 right now because that's going to be wiped away when inflation hits. No one wanted to hear that. No one listened, especially not, people who were saying $1,300 is not going to get me anywhere. I need more so that I could stay home. And when you really unpeel that onion, it was stay home, take this money.
Yeah.
Life's going to get harder for you. We don't have science around why you should do this, but we're going to tank our own economy for faux science and just stay there for a while. And then now we all have to suffer. I mean, that's just one piece of it. Of course, the war in Ukraine has exacerbated that. But we can't put on blinders if we did champion these stimulus packages for whatever reason, because we thought it would slow the pandemic. It didn't. First of all, it didn't do whatever it was supposed to do, and now we all feel it together because everything's
so does that mean
expensive.
when there was zero? So if we got a loan personally, and let's say we qualified for 2% interest, now because they have to pass that 5% on to us, we would get the minimum we could get is 7%. Is that kind of how that works?
Yes.
Yeah, I mean interest rates are right around for like a mortgage. You're like really about like 7% right now. Yeah.
6.5, 7.
Yeah.
Mm-hmm. And so that's all those people who got really favorable loans, sub 2%, you should thank your lucky stars for that and keep it if you can, because you're not going to be able to refinance into a better loan anywhere in the near future.
Well, if you look at the bond markets, and the people that study the bond markets very closely, these investors are the most sophisticated in the world. They're the smartest investors, and they're projecting a July rate drop. So this 25% basis points that we just saw could actually drop in July. And then another even rate drop in December. So if I was looking at the data today and the Fed Watch predictions for July and into the fall, we could see a rate drop. And we could see it drop back down to 4% in that, which could drop an entire point. That means the US dollar is far less valuable. So what you need to understand about this is that means the US dollar, everything was favorable about the US dollar. That means it's now money will flow out of the US dollar. And that's what you're seeing. You're already seeing it overnight. So investors will take their money out of the United States if treasuries are not as sexy as they were. If these bonds are not as sexy as they were. They're not yielding as high returns. And they're going to take them into other currencies, other markets, Chinese markets, European markets, wherever they can get better returns. And so what we will see, we're going to see gold. Gold is already touching around $2,000 an ounce right now, almost like hitting record highs right now for gold. Silver also going up. Real estate, value of real estate. We're going to see gold right now touching that 2,000 mark. And Peter Schiff back in the fall nailed this prediction. He said inflation is going to get a whole lot worse. And he was right about that. And he yesterday said, buckle your seatbelts for even higher inflation this year. And now add on to that record high credit card debt that Americans are sitting on right now, like we've never seen before. And he said this is a financial crisis, even though the media is for some reason refusing to call it a financial crisis. Listen.
That we have record high credit card debt and the banks are failing. It's not a coincidence that both the borrowers and the lenders are broke. The reason for that is the Fed. The Fed kept interest rates artificially low for more than a decade, encouraging people to go deeper and deeper into debt and banks to extend them the credit. And now that they're forced to raise interest rates, something that was always going to happen, they have created another financial crisis, which is something I've been warning about for years. And the media is reluctant to call this a financial crisis. They keep saying it's a banking crisis. The financial crisis of 2008 was a banking crisis. Nobody wants to say what it is because they don't want to evoke memories and comparisons to 2008. But this is a sequel to 2008, and like all sequels, this one's going to be worse.
It is interesting. Why won't they call it a financial crisis? Is it because Biden's president right now?
Well, we saw this last year when we
sustained.
saw 2 quarters of GDP loss, which is supposed to be the definition of a recession. And the government then went and released press releases saying we're going to change the definition of a recession.
Yeah, it's crazy.
So it very much is a public relations campaign.
So you have the Fed.
yeah, you don't have to go.
Sorry, go ahead, guys.
I was gonna say you don't. You literally just have to listen to Jean Pierre, because she will tell you this is the best economy. Like, we're doing great.
Yeah.
You know,
yeah, jobs are plugging along.
Main Street's
Everything's great.
Yeah, Main Street is doing just fine.
Philip, go ahead.
So I was going to say, I just love that. It's my favorite government response to any crisis, anything like that is like, ooh, that word sounds really bad. It makes us look bad. Let's change the definition.
Right.
Let's just we'll just change the definition. It's not a recession because we just changed the definition of recession. This isn't it now.
Well,
We're good.
How many definitions have been changed under the Biden administration? We've changed woman, we've changed vaccine, we've changed, like, all these definitions just keep changing.
Yeah,
Yeah.
that's a good point.
It's called moving the goalpost, you know? So there you have it. The Fed saying basically we are in a recession, which we've all been saying, admitting as much, with GDP projections much, much lower. And again, the US dollar, people jumping out of the US dollar. So we'll keep our eye on what this looks like over the next couple of weeks. And there are still a lot of stress tests. Oddly, the FDIC kind of put on hold this auction for SVB Bank. Like, they were Silicon Valley Bank, they were supposed to like put it up for auction, and they suddenly, like in the past few hours, like stopped themselves from doing that. So there's some real weird funkiness going on right now in the markets, but you know, you got to protect yourselves. Thank you so much for watching this segment here at Redacted. We are live every day at 4 p.m. Eastern time, trying to share the stories that the mainstream media will not cover. You should also come over and join our community of Redacted Rebels over at redacted.inc. That's our private locals community where we can share exclusive content that we simply cannot share here on YouTube. Come over and join the rebellion together right now by going to redacted.inc. We'll see you next time.